Hello, everyone. Agency Reporter, as you all know, has been hosting a special section called In Conversation With. And our guest for today is Nimesh Shah. He's the founder of Xebra Business Financial Suite for marketing communication agencies. We felt the need to have a conversation today with Nimesh as recently we hosted a webinar on profitable growth just on this World Entrepreneurs Day. And the panelists made some really good points. Most of them talked about operational efficiency, and Nimesh will help us understand better how to achieve uh, better operational efficiency. Right, Nimesh? Welcome.
Hey, thanks Rahul for having me over. Really a pleasure to be associated.
Right. So now, Nimesh, one of the questions I asked in the webinar was whether businesses can be still profitable if they do not decentralize basic functions like finance, sales, operations. What are your views on it?
So look, I think what I have seen, and with the work done with other agencies and with a lot of entrepreneur friends, I think the biggest thing about business is that you just need to be completely in it. Any founder who has started it would be very strongly associated, but they just need to know the pulse of where they are, what they've been doing, how are they growing, who their key clients are, what are the key offerings, what offerings are being picked up by the clients. I think a couple of things that I have noticed is that we get so involved as founders sometimes with the operational side of things that very little time is being given to analyzing businesses, analyzing where you are headed, what you are doing, how are you doing it, uh, just trying to get into the basics and nitty gritties. Most of us have developed some sort of a MIS report, possibly at a monthly level or quarterly level. Uh, but I have seen with a lot of them, it's at a very agency level, at a top view level. I feel the time has come to just get into a little bit more granularity. And finance is one part which, honestly, like sales, a founder simply cannot outsource. It is something you can outsource accounting, you can outsource all of that, but knowing where your company is headed, what are the key matrices is something that you need to be involved on a much more regular basis. So this is something that I feel at any point of time the founder should be on top of, and should develop his or her own set of reports for their kind of business that they are in, and monitor it very very regularly. And I would say not just at a top level but deep down, go at least one or two layers below, to get more granularity of your data. So very essential, and that should be something that is controlled and handled by the founder themselves.
Absolutely, Nimesh. But to some extent, I do agree. And there was another question about that. But often growth is confused with profitable growth. How do you make sure you are not just growing but growing profitably?
So that's a very interesting one, and I think anyone in the service sector, this is something that happens that a lot of people today are first generation entrepreneurs, and so they are very clear with the idea that they have in their mind. They are also domain experts, which is why they are able to venture out and start their own thing. But somewhere down the line, what happens is that a lot of other matrices have started gaining undue importance, which may not be relevant. Maybe they've just been conjured up for your investor, or to raise some more funds. So in service sector, I find a lot of people chasing things like just the revenue. You want a top line, so you want revenue, or you're looking at just number of clients, or you're looking at vanity matrices like uh, uh, vanity matrices like number of employees, or how many offices do I have. Now all these things are good, from a social tag point of view. But what you really need to realize is that the top line just means sales, right? This is something that you get at an overall revenue level, but this is not something which you earn after deducting all your expenses. And in the service set of business, whenever you get a new client, your costs also shoot up proportionately. Yeah, so all the costs, be it in terms of the team, you might have to expand your team in order to service the client. You will need to increase your infrastructure. You will have to need your office equipment. Also possibly at a certain stage office space starts getting lesser, so you need to move into larger, premises. Now what all of this is doing is that it's immediately increasing your expense, right? So the moment you get a client on board, by that month end, and the beginning of first month, all these expenses have come on board. So the expenses have started immediately, while the earnings out of that client are going to take a while, right? Also, uh, your cash client may not be immediately paying you money, so there might be a credit period that you would have decided with the client, and assuming the client sticks by it. Otherwise there is that credit cycle also. So your expenses hit you immediately, while the money comes in after a longer time. Now that's where the problem starts occurring. Yeah, so that's where your cash flow starts getting hit. The second thing is that, when you're looking at the vanity metrics of, you get excited about, okay, wow, my number of clients have increased by so much, or my team size has gone up from X to Y. But is that increasing the net profit at the end of the day? So number one, is your gross margin as a percentage going up? Is your profit, net profit in value terms, absolute value terms, is that increasing with every new client that you are bringing in? Because you need to realize that there are a lot of costs associated with every new growth or new client that comes into play. So you need to factor those costs in. Some of them are apparent costs, which is your office equipment, new members. Some of them are not so apparent, which could be in the form of, cost of capital, because the capital is getting deployed, over there to a while. Your servicing cost increases. You will need many more senior team members. So when you start adding those costs, you realize that the earning that you've got from that new client has been very little, or in some cases I've seen actually there's been no earning at all, or a degrowth. But because people, when they're evaluating their numbers, aren't looking at just the top level details. They're just looking at the top level revenue, so they don't realize that. So that's the difference between growth and profitable growth. Yeah, that with every new client, you have to know as a founder, how much is that impacting your bottom line? How much is your bottom line increasing by? Is your hopefully your gross margin is increasing with every new client coming on board? Or if not, at least you're maintaining the current level that you have. Yeah, so that's why just growing is not important, but having profitable growth is what should be the deciding criteria.
That is very well explained, Nimesh. And I asked one of the panelists to what extent businesses should depend on tools and automation for just the thing that you were telling right now. He was not. He was sort of not very much in favor of depending on a tool. At least when it comes to finances, he said that this should be uh, this should be managed by the founders. So, what is your take on that?
Yeah, it should be managed by the founder, and like I was saying, beginning, that it's not something that you should outsource to anyone, right? You should be able to get that. But as a founder, you should be able to interpret the data. But if you are spending time collecting the data, then you're wasting your time, right? There's a difference between spending your time in collecting that data to getting a report on your table and you analyzing and taking business decisions. So my feel is that because the founder's time is limited, and one of the biggest mistakes that we do at the starting point is we get involved with every aspect of business, thinking that we know it better, or we should be involved with everything. That's not the case. You should try and make sure that you have developed systems and people with you who will be able to give you the necessary information and data whenever you ask for it. And then your role starts after that, that how do you read that data and interpret it into decisions. The why do we say that 90% of startups fail is because majority of the times they simply are, one, not analyzing the data at a deep rooted level. Number two, they may not be able to get that data that they're looking for. Yeah. And number three, they are either getting involved in way too many other things which are not so critical for the business founder to be involved in. Now, this is where I feel that things need to change. You need to know what you should be looking at. So you should be there to make decisions. I remember in my previous corporate life, my uh, when I was working with one of the FMCGs, my boss used to say, you are being paid to take decisions. It doesn't matter if they're right or wrong, but you're getting a salary to take decisions. Because if you sit on it, then you're doing a disservice to all. Yeah, so that's the first thing. Now, what happens is that at a SME level, there are multiple softwares that are getting used. More often than not, you have a Tally being used for a accounting software, right? You have a some GST software now. You have a TDS software. Uh, Larger companies will have employee payroll softwares, in order to automate that. You have then an invoicing software, right? Because when the complexity increases, you want to do that. Now, what happens here, Rahul, you have to understand is that as a SME, anyway, you're limited on resources. If you are investing in multiple softwares, doing multiple things, they are not talking to each other. So for you to generate a MIS report, you are literally importing and exporting data. So you're exporting data from one and then importing it in the other to churn out another report. So you can never see data as an integrated manner. And that is where the automation is required. So to answer your question, you need to be on top of things, but how do you ensure that the people who are going to give you that MIS report are giving you accurate data, on time data, real time data? Yeah, and when you want it. Today, without automation, a simple report can take from 5 hours to 3 days. Yeah, if you want to know, if I want to ask, today people, your clients are deducting TDS on every invoice of yours, right? How do you make sure that that TDS that is deducted by your client is how much is it at the end of the month, client wise? So that's not there. So when you ask, and a lot of entrepreneurs don't even check that, because if you don't know how much TDS amount they've deducted, and secondly, have they deposited that TDS amount with the government? If they've not done that, then you can't take that income tax credit, correct? But as an entrepreneur, you don't even know how much is the TDS deducted by each client at the end of the month or at the end of the quarter. That much amount is right now something that you are not able to claim as a tax credit, right? Which is impacting your cash flow. Now, how do you get this information if there is no automation, right? So without automation, it's not that life cannot work without it, but in today's complexities, that's not a place where you want to waste your time. Yeah, that's why I believe that automation is critical on accuracy of data and timely availability of data.
Absolutely, Nimesh. And in India, generally profitability is a founder's task. You touched upon that in your first answer, but actually, it should be the responsibility of each and every employee, I think. How are you ensuring this in your organization? And what is your message to other agencies out there?
I think uh, I think any good company, I don't think it's a one man show ever. I don't think any agency grows to any size if there is not a good team with them. Yeah, so I firmly believe that it's not one person's responsibility at all. It is a team's effort, but obviously you have to layer it out. So you in your team there will be people with varying degrees of experience and varying degrees of competence, that will be there. So each one of them has to be properly defined with the role that they are going to play. So it's a function of, at the time of hiring itself, I feel one, you should be very clear when you're getting in a senior set of people, and define their role very well and their accountability very well, so they know what they are getting into. They also know that this will be one of the key deliverables, as a part of the team. So, firstly, I feel that it should never be one person's job. Neither is that one person ever going to be competent or better than a team. So, it should be a team task. There can be a leader there, but it has to be a team task. Second, every senior person has to be involved in it, and the profitability can be increased in multiple ways. It's one is through, of course, growing business, but the other way is also ensuring, let's say, getting your payment on time. So, a servicing team could be accountable for that, and made sure that they are following up at regular intervals to with the clients, to ensure that the client is paying back on time at the timely intervals, and whatever was the credit period agreed on. uh, the admin team could be responsible for looking at costs, at a continuous level, and seeing that which costs are redundant and which costs should be incurred, right? So that's another way to save money and increase profitability. So there has to be a difference between costs and expenses. I want to make that clear also. You have irrelevant expenses, that come along the way. Those should be kept chopped off, every single point of time. But at the same time, don't confuse it with investments. Yeah, so you must invest in tools, you must invest in technology, you must invest in data, because that overall is going to help you with moving your from manual to automation, right? So you will free up people's time, which can be better deployed on profitable activities. So cutting cost does not mean not investing in your company. It in fact means reverse. You need to invest in tools so that you free up people's time, right? So why do people buy these invoicing tools and accounting tools and all of that? So that you can use that accountant's time or your team members time in more value generating activities, rather than spending 2 or 3 days of his or her time calculating a monthly GST. Yeah, I mean, that's such a wasteful exercise. So all these repetitive tasks should be outsourced on a tool, right, and save people's time on that, which again means more money, right? Because in service industry, time clearly equals money. So I feel it is a team's responsibility. The onus should be defined, the description should be there with everybody, and define the role, make involve everyone, be transparent, in the dealings, so that people realize where costs are and how they can work as a team to make it more profitable.
While we are on the topic of profitability, Nimesh, help our audience understand how they can identify potential problems that could hamper the profitability of any business.
Yeah, no, Rahul, that's a good one. And I think one of the critical thing always is to understand the risk that your company could be facing at any point of time. Now, this risk could be from multiple angles and aspects. So one of this could be your sheer dependence on, let's take one example that, in terms of clients. Yeah. So how many clients of yours, or what percentage of your clients are contributing to, let's say, 80% of your uh, growth, at 80% of your revenues? So I mean, if less than, I mean, close to 10% or 15% clients are giving you 80% of your revenue numbers, then you clearly know that you are at a high risk zone, because very few people are contributing too much to your revenue. So any one of them dropping out would lead to a significant impact in the sheer sustenance of your company itself. Yeah. At the same time, you could do a similar analysis in terms of your service offerings. That what are your core offerings, and uh, out of a whole bouquet and the range of offerings that you might have, which are the ones that are delivering the most for you? So you need to realize that and see that, are you investing proportionately behind those services? So you might think that you are good in delivering 10 different services, but your clients are picking up just 2 or 3 of them, right? So that again is an understanding that you should have, so you can then take decisions basis that. So now you can either decide that you become a far more focused company providing only those three. So you build in a lot of vertical depth, right? So you bring in a lot of core competency in just those 1 or 2 things, right? Or you redeploy and offer other 4 or 5 services, yeah, which right now the clients are not taking because maybe they're not aware of it, or maybe they don't know that you, or maybe they don't have any case studies supporting those other 4, 5, 6 services that you give. But the point I'm trying to make is that you need to have this data. Once you have this data, then you can take decisions like this to understand the risk that your agency is facing at any one point of time. The other thing you should look at is ensure that majority of your costs are variabilized. Especially when you are in the growth phase and you're a MSME, so your MNS, in that MSME, and you're growing and it's your formative years. it's indeed very helpful if you don't incur too many fixed costs. Yeah, so try and make most of your cost variable, which means that these costs occur only if a certain event occurs. So, for example, if you get a new client, only then does the cost come into play, right? Or if you reach a certain threshold of profitability, only then does the cost come into play, right? So keep that into account. So keep discussing, so if you want to invest, let's say, in some software or some product or something, can you speak with that founder and work out a EMI way of paying, yeah, instead of just taking a upfront hit on it, right? Or let's say you do get certain specialists or consultants on board who are very expensive, then make sure that there are certain KPIs that get built on it, and they also get rewarded when certain results are achieved. So it's very critical to use and get this kind of data. Be aware of the biggest cost that is there is the cost of credit. And I've come across so many agencies and people who complain to me on a private level that they are literally financing the client sometimes because their monies are stuck for 4, 5, 6 months. Yeah, and there is a cost that gets added to it. So be conscious of all the visible and so-called invisible, right? Tangible and intangible costs. Be aware of the risk analysis, that you can do. Now you can do this data, you can calculate this data manually, or there are tools available today that you can use for your software, well, sorry, for your company, which will give you this data out in a jiffy.
Sure, Nimesh, you spoke about data a lot, and I just wanted to touch a little bit on that. There's a prevalent CA culture in India, and especially with small and mid-sized business, this culture is very prevalent. While the data CA can pull out and things she can do with it is all fine.
Mm.
The problem I feel is that the data like average credit cycle, more profitable tasks, risky client details, etc., is reaching the entrepreneurs too late, very late, and the decision making is therefore impacted. So, can you talk about how and why is it important to get access of data at the right time or in real time for that matter? And the next part of this question would be, uh, how will young founders ever know what to do with that data?
Yeah, now this is really a good one. Yeah, and you are so right when you say that today majority founders have outsourced completely all their finances to the CA. Now, one has to break this thing up, and usually why this happens is that anything that you don't know, right, or you feel is less interesting, you tend to just give it out to people saying that, hey, look, I know my domain. That's why I've started my company, and so I just want to prioritize on that. Yeah, so that thinking is good and bad in its both ways. Of course, you should focus on activities that you're good at in your company and spend a majority of time, but you need to know that, like sales, like business development, finance is something that you have to learn. If you don't know, learn. If you don't like it, then find a way to like it. If you find it boring, then identify ways in which you can get it back to life, because this is extremely critical. It's like a lifeline. You simply cannot say that this is something I will not do and I'll outsource it. So we need to split this. It's not one homogeneous set of things. There are activities like, let's say, making a balance sheet, or making a, maintaining general ledgers, or passing journal entries. Now that's accounting, and that can easily be given to your accountant or your CA, whoever is working and helping you with that, right? So those basic accounting features of chart of accounts and journal entries and ledgers and trial balance, all that can be given to that person, and then he or she can maintain it for you and do it. What you need to know about finance, and this is actually less finance, and I would say business data. I mean, you can call it business financial data, but that data is critical. Like, how many days of credit are you giving to your clients? Now, this is something your CA is not going to help you with, because he's doing the accounting and the auditing part of things, and but this data is actually impacting your business. So this is like a business financial data and not like an accounting data. So you should know this, and it is very difficult to know this, because to calculate a running average of what is the credit cycle for each client, because you might have many clients, you might be invoicing them multiple times in a quarter, and every time their payment for each invoice could also be differing. So which is why you have tools which can calculate this for you and in real time give you data. Like, so that is where, and these were some of these places where we thought of when we realized it, that there's nothing available right now. And this is important to know, because if you don't know this, you are in that 90% of startups that's going to fail, even if you have a good idea, and even if you are good with your idea, because you are not managing the other part of business that is going to help you survive, right? So it is extremely critical, and you need to imbibe it that those aspects are important. So we said that let us help the founders with getting that information with a click, and that led to the idea of launching Zebra. Well, what Zebra does and why we say it helps you with profitable growth is that data points like this. So if I want to know it, let's say I have 20 clients and I'm invoicing them multiple times over a quarter or over a year. So I need to know now what is their payment cycle like. If I'm using Excel to make my invoices, and I'm using very basic accounting software where I record, where my accountant records, okay, आधा पैसा आज आया, बाकी का आधा पैसा came after 40 days, 50 days. There is no track. You don't know what is the payment happening like. So you don't know if this client is profitable for you or not. And you need to do that profitability analysis at each client level, and which is not possible if you don't have the right tools, because manually calculating that is completely error prone and will take you so much time. That's not possible, or your CA will charge you a lot of money to carry out this exercise. Which is where if you import that data into Zebra, or Zebra allows you to make invoices, record the payments of those invoices, record your expenses, payments made to the vendor, everything you can record in Zebra. You can carry out your payroll, you can carry out asset purchase, asset sell that you've done, your depreciation. All of this happens automatically. The moment you record an invoice and the moment you record the money that you received for that invoice, automatically your ledgers, trial balance, profit and loss, balance sheet is updated. Yeah, so imagine you're saving all the time, your auditor's time, your CA's time, everyone's time. Number two, the moment you update your invoice and the money you received against the invoice, Zebra calculates and tells you that this payment happened, let's say, in 25 days, or the next payment happened in, say, 35 days. Other payment happened in 15 days. One payment happened in 42 days. So with every payment that you receive from your client, Zebra gets that data, recalculates it, and gives you the real time credit number for that client. So when you speak with that client the next time, and you can now confidently say that, hey, look, buddy, our contract was for 30 days, but if you look at the last 1 year, or last 1.5 year, or last 6 months, my average credit time that I'm extending to you has gone up to 49 days instead of 30, or has gone up to 53 days. So you're getting precise data. So you can negotiate with the client now and say that, look, we need to bring this down. Yeah, or you increase my retainer because there is an extra credit that I am extending to you for the last 6-8 months. Yeah. Number two, you can talk with preciseness. So you don't have to make a blanket statement saying all your payments are delayed. Not at all. You can be as precise as saying that your invoice number XYZ are the ones that are delayed, right? So you get clarity, you can speak with authenticity, and that changes the entire dialogue mechanism with the client now. Yeah, they realize that you know what you're talking, you have the precise data with you. Yeah, so you can use it optimally. Another example, I'm just going to take 1 more minute, Rahul, and share with you, which you can get out of Zebra, is, let's say, a risk analysis. It gives you a very clear picture, and the moment you start feeding in the data, and the more invoices you generate, the more expenses you start putting in, the more bills you raise, it starts telling you in real time. It's like a speedometer. So it tells you, where is your risk? Are you in the too risky zone? Are you getting healthy, or are you getting financially sound? So in real time, you get to know that where is your business current status. Yeah. Number two, it has a quadrant which classifies your all your clients. So let's say you've got 20 clients, not all clients are equally profitable, so it plots your clients into multiple quadrants, right? So there are four quadrants, it plots them into the four, and it then guides you on what you need to do if your client falls in a particular quadrant. So it tells you which are your golden clients and you need to over invest in them. Maybe you need to put your best people on it. Maybe even you should increase your time with them. And it also tells you the least profitable or the ones that you can actually terminate. Because by terminating non profitable clients, you are actually improving profitability. Yeah, you're freeing up your resources. Now tell me, how can you take this kind of critical calls if you don't have precise data? Intuition is one thing, intuition is more, on a on larger basis, but intuition is not used to make business planning. You can't do direction setting for a company. Now let's say in times of COVID, when we all are struggling for business, so I find a lot of people are accepting any work that comes their way, and I'm telling them that's not right. Don't take any work that comes their way, because it may not be profitable work. Yeah. Now you can choose to take a call by saying, okay, and this time I'm fine even if I earn 5% profit. I'm willing to reduce my profit margin and I'm willing to work with lesser profit margin. That's fine. But so long as you make a conscious business decision. But if you don't have data, then you are making a decision basis nothing. Yeah, you can as a founder make a decision that fair, even if I get less profit, I still want that account because maybe the client gives you brand value, maybe it will help you get more clients in that domain, maybe it will help you do a lot of creative work, so you want that client. You could have multiple reasons, but that is a informed, calculated business decision. And there is a difference between gut and business. Gut is good when there are more, basic, I mean, you're talking of a larger level thoughts, and that's why intuition can make a difference. But if you're investing your money, if you're deciding on what needs to be done next during this COVID time, you want to know every rupee matters. Where should you spend your rupee? What should you spend it on? You need to have precise data, and this is where Zebra comes in to make accurate business decisions, right? And that can only be done if all your sources, your invoicing, your expenses, your payroll, your tax calculation is integrated into one. Because then the data that comes out of that is precise and there is no loss in transmission. Yeah, that is growth. Have you ever heard of companies who've made it big, talking like, mota moti, or do business leaders, do successful business leaders talk like, okay, so broadly speaking, blah blah. No, people don't talk like that. People do detailed decision analysis to the decimal level, and that is why you need software like Zebra to help you get there.
Great. Thank you, Nimesh, for taking out time from your busy schedule and joining us today on In Conversation With. Appreciate you being here, and we'll see you next time. Stay safe. Bye bye.